Next up is Mark from Beachbody Company.
Thank you. All right. Good afternoon, everybody. Thanks for being here. So the Beachbody Company, ticker symbol BODi, also being rebranded to BODi, BODi, as in invest in your body, and BODi as in invest in bodies. So great to have you here. I'm the CFO of the company. I've been with the company about a year. And before that, I had a very operational M&A and transformation background. And I'm joined by Oswaldo Busquet, my head of FP&A. We'll have him answer all the tough questions. All right. Some key metrics so you know a bit more about us. We have 120 streaming programs. Those are programs, not videos. Individual videos, over 8,500 unique streaming videos. It's arguably one of the largest, if not the largest, fitness content catalog available. In 2022, we had 121 million streams from our 1.95 million paid digital subscribers. That's how much we finished 22 with. And not everybody knows this, but we're both digital fitness as well as nutrition. And our nutrition business, we have 220,000 subscribers, or subscriptions, sorry. Because one subscriber in digital could have multiple nutrition subscriptions. That's why we count subscriptions there. So I think some people or a lot of people may know us for P90X. All right. We've created what's arguably the most well-known fitness program that's impacted a lot of people like us in our lifetime. Well, we'll walk you through how we've created many more and how we're going to create more to come. In 2022, for those that don't know much about our financial metrics, $692 million in revenue. And we've been public since mid-21. So the company's been around for 24 years. Very few people know the track record financially of the company, but we've been EBITDA profitable for 21 out of 24 years. So an incredible legacy of migrating through different stages of the industry, defining where the industry should go, and just an incredible legacy of financial responsibility and profitability. We operate in 4 countries, US, Canada, UK, and France. Our mission is to help people live healthier lives. Cannot be a better mission than that. Because if we help them and make money along the way, it's excellent. We operate in four TAMs, right? There's 4 total addressable market we operate in. Digital fitness is what we're best known for. That's a $19 billion TAM, growing at 33% a year. We also I'll walk through shortly our revenue in the supplements business. We have a large supplement business. That's a $152 billion TAM. And now we're getting into healthy desserts. And I'll walk through a bit more of that story because it's not new products. It's rather how we're positioning our existing products. And that's a pretty nascent but really fast growing market of $48 billion. And then connected fitness stands for hardware, like a stationary bike with a connected screen to our online content. We also have a bike business. We operate in there, and that's a $12 billion TAM. So that's actually the smallest out of our 4 TAMs. But most importantly, when you think about, we've got 74% of U.S. adults, roughly 150 million, that remain overweight or obese. What does that mean? Massive opportunity. Because whatever's out there, right, there's no shortage of, we're all members of different solutions and gyms, but something's not fixing it for these 150 million people. So our role, and we're going to walk through our vision and our transformation of what we're doing, our role is to create something that helps those people. And that's how we're thinking about our TAM. It's not just how we grow it by 10%, our subscriber base, but to grab a much bigger share by creating something really engaging. And I'll walk through a bit more healthy dessert shortly, but the short story is everybody likes dessert. Everybody would love it on a daily basis. So when we start talking about having a healthy dessert on a daily basis where you could feel good about yourself consuming it every day, we think that presents a really large opportunity for us, given our existing product set. So, like I said, we're going through a big transformation because when the pandemic came along, businesses like ours, which is considered the home fitness industry, had a big boost in business, right? And everybody in the digital world bet on that growth continuing in perpetuity. Well, once the pandemic, the market reopened up and the economy reopened up in mid-21, everybody wanted to be outside. So we as a business felt a lot of contraction, as did most of our competition and almost everybody in our industry. So we took this opportunity, frankly, not just to tighten our belt and see how we survive this contraction. We actually took the opportunity to say, how do we come up with the next best thing while simultaneously cutting back our costs dramatically? So I'll walk through the kind of costs we've cut back, but in terms of our vision of where we're going, like I said earlier, we want to create something that's very engaging for that 74%. So we went and talked to our top consumers, and we also talked to our, when we did this thing called the super consumer analysis. Who are your top users? How long have they been with you? What attracts them to you? We also analyzed the trends in the market and where it is and where it's going in the consumer. And I'll walk shortly through something called the imperfection economy. And we also have this gig workforce. Just like Uber operates a gig workforce of getting people to drive cars around to earn extra income, well, we have a gig workforce that tells people, you're very passionate about being healthy and fit, you love our product, get out there, talk about it online. We spoke to that gig workforce about getting their feedback of where things should go. And based on all that, we've rejigged our entire platform and just relaunched it in March, a month ago. So I'm going to talk about what this new platform entails, what we just launched, which is all about a simpler fitness program, as well as we added something called Mindset. And I'll walk through what that is, but we feel that's pretty game-changing in where we're taking things. Also, as it relates to the bike business, we are trying to make the bike the most affordable bike out there as a solution. That's what we feel could present a good opportunity for us. And then lastly, on the right-hand side of this page, when you think about everything we're trying to do, we looked at the top New Year's resolution for 2023. We're basically in 5 out of the top 10, right? And these are the top 5. Improve mental health. That's why I'll talk about our Mindset solution that's come out. Improve diet, improve fitness, lose weight, and improve finances. We're the most affordable solution to do this. So what is the imperfection economy? Yes, a lot of you reacted to P90X. That is still a very appealing market where you show big muscles, 6-packs, and you tell people, here's the before and after. Do you want to achieve that? Jump in. That still works for a lot of people. But frankly, when you look at the white line, which represents those not happy, in the purple line, those being very happy in how those flip, consumers looking for something different today, right? They need something more accessible. So they may not need or want a 6-pack, or maybe they want it, but they feel really intimidated to jump in if that's what you're showing them up front. So a lot of our repositioning and frankly changing the name Beachbody, because not everybody may think of themselves as being anywhere close to having a Beachbody, has to do with making ourselves more accessible and reaching out to people. We've launched even a series called Beginners, and it turned out to be pretty popular to start off with. So the consumer today is all about, I want to get there, but I don't want to be intimidated to get in, and I want to enjoy my journey. So a lot of the changes we're doing are about appealing to the consumer of today. So let me step back and just talk a bit about what makes up our business, right? We have 3 major lines that make up this platform we call Health Esteem. First, there's the digital platform. The digital platform is about 40% of our revenue. And you used to subscribe for roughly $119 a year, and now we're moving it to $179 a year in this new revamping we just did in March. What does that entail? It entails 3 things: fitness content that we're very well known for, but we also revamp our nutrition content, and we launched Mindset. There is no other company we know of that could offer these 3 things in one single platform, and that's what delivers a holistic solution to help you achieve your objectives. Then we get into nutrition. As I said in the TAM, that's one of the big TAMs we address. That's 60% of our business. That we have fewer people consuming that, but it's a very different business model because they consume it on a recurring basis. So when you talk about 220,000 subscriptions, that's about $100 a month that they're consuming on an ongoing basis. And about a third of that business is also one-time orders, so it's not all subscriptions. But that's 60% of our revenue. And then finally, on the bottom right, connected fitness, which is the bike business. It's the smallest part of our business, but it attracts customers that are very loyal with a very low churn rate. And our aim there is to create something that is very affordable. So we have it going at $50 a month for both the bike and the subscription, which is the best deal you could get for something of that quality. So when we talked about simplifying the fitness programming, what that means is we used to be into, when I said at the beginning we have 120 programs, that's all about launching a few large programs a year. So now what we've moved it to is launch 4, I'll call them body blocks. It's like a mini program, but they're very standardized in their format because we're trying to get the consumer into a series. Instead of a big movie where you come in, you watch a movie, you love it, and you leave, you want to get the consumer into a series. That's what helps them achieve their objectives, creates more stickiness. So that's the big model change there. And every month we have 4 standard ones we launch called All Body, Bike, Iron, which is weight training, and for beginners. And the idea here, like I said, we were getting a lot of consumers that come in, they come in for a program, they like it, some stick with it and keep doing that program, just have people doing programs for years. But we frankly had others who said, okay, I like the program, and they moved on and didn't come back. So this is a way to create a lot more stickiness, and thus people would renew. Now, the other part that is really game-changing, and I spoke about this mindset. So we just launched this a month ago, but it's really big. Like I said, people want to enjoy their journey getting there. At the same time, everybody wants to get more fit, but very few people are sticking with it. So what's the self-motivation you got to do so that you achieve your objectives and enjoy the journey? So that's a lot of what this programming is. And there's a series of master classes launched on a monthly basis, highly curated. All right. Now, going back to the healthy dessert one. So like I mentioned, this is not a new product. This is rather repositioning our product. So for those that don't know Shakeology, I got some samples up here. It's a powder with a superfood health mix. It's got everything you want to take in a day to be healthy, regular, lose weight, reduce cholesterol. That, what we're telling people is, we got a few hundred recipes online, if you mix it with a few healthy things, you could produce a healthy dessert and you could enjoy it every day. The idea here is we can't always get everybody in through fitness, right? Some people may really enjoy their gym they're at. Other people may want to continue watching their Netflix, but they may have an appeal to consume something every day. So it's a different sales motion, and that's what it is. It's more taking an existing product and expanding it into a new TAM versus launching new products. So thinking about our financial model, this is what we're trying to do, right? So I spoke about our 3 product lines that drive our revenues. We want our gross margin to be 65 to 70%, which we were there right in 2019 before all the pandemic stuff started. What makes up that is, like I said, digital. At 40% of our revenue, that runs at roughly currently around 80% gross margin. It had a high of 87, went down to 77 as we lost a bit of scale. As we gain back scale, it should easily get back into the low to mid 80s. Nutrition, we had it we had it at one point at 65% back just 4 years ago. We've run a lot of transformation in our nutrition. We're changing our product mix. So we're doing a lot of things to improve the nutrition gross margin, and that should be running at 60% gross margin. So given that 60% of our revenue and digital is the other 40, that's what gets us to a 65 to 70% gross margin. So very healthy gross margin business. The bike is a smaller part of the business, but what we're trying to do there, like I said, is you got to think about the lifetime value of the customer you attract, right? So as long as the lifetime value of the transaction between selling the bike up front, that's something, break even or small loss, but then you get them at an 80% gross margin afterwards, that's what drives a profitable business there. Then the next biggest thing is our sales and marketing. We have 3 ways to go to market, right? Sales and marketing is 50% of our revenue. And that's made up of 3 things. I talked about that gig workforce, right? We call it our coach or partner network. They monetize their health and fitness routines. They get in customers, and they get a big part of that in terms of bonuses and commissions. That's the biggest part of our selling and marketing spend, and it's all variable. The second one is direct media, right? There we run it with a very attractive ROAS, so we're very disciplined to get in-year payback. And then the third, which is our biggest opportunity that we're working on, is what we call our CRM. We have over 20 million followers across our different social media handles. I'll run through it shortly. And we have a database of 16 million emails. So we're trying to get better into personalization and segmentation so we could do campaigns there and, drive better win-back campaigns, cross-sellings, and reactivations. And then finally, tech and G&A make up each about 10% of our revenue. So when you think about our net income to EBITDA being roughly having about 10% of add backs, that's what gets us to a 10% EBITDA model that we're working on. And like I said, that's where we're in 2019, so this is not a stretch for us. And a lot of our transformation has been driving about getting to that front. So in our business, you look a lot at what we call the LTV to CAC ratio, right? I just spoke about our 3 go-to-market model, which drives your customer acquisition cost. If you look on the other side, what are all the levers to increase the lifetime value of a consumer? So by increasing the upfront price from $119 to $179, you start by increasing it there. And then our margin and costs, we drove a lot of transformation to reduce our cost structure. That's going to improve our margins. And third, when you talk about that content I created, that's all about driving more engagement, that leads to more renewals, and thus you retain consumers longer. And then finally, product penetration, right? We're trying to aim to have the whole solution for our consumers. If we have more of our subscribers consuming nutrition, that's what drives the most attractive type of customer, and then that unleashes that bigger marketing spend to attract them. So when I talked about our social media following, if you think about our own social media handles, and this is an aggregation of Facebook plus Instagram plus TikTok. So we added up for our handles as well as our micro influencers. Those are the leaders in that gig workforce I spoke about, as well as our super trainers. Our super trainers are the ones who do the programs. So they have a lot of their own followers as well. So between all this, we have a massive outreach. And the best part about this one is, for a company like us, when we're changing a brand or something like that, it doesn't take much to inform everybody and get the message out, which is what we're going through right now, and it's all been very well received. Management team, Carl is our CEO and co-founder. He started the company 24 years ago. Incredible visionary. I mean, he defined the at-home fitness market with that P90X program, launching Shakeology, superfood health mix. I mean, this was launched 12 years ago and already had ingredients in it that everybody's talking about today. So very early mover, and now launching this new Health Esteem platform where we have this mindset content combined with fitness and nutrition. Kathy Vabrex, the Chief Operating Officer, brings incredible experience from the digital world, has experience with the digital companies like Activision and EA. Like I said, I joined about a year ago. I have a very transformational background and a deep finance and M&A background. So a pretty complete set of team that mixes well, I'd say, digital, nutrition, and content creation. And that mixed together is what creates a stellar team. Quickly, I'll just recap on our results from Q4, which is what we last reported, and we're reporting our Q1 on May 8th. Our Q4 22, we reported an adjusted EBITDA profit of $3.5 million. We reduced our operating cash use in that quarter to $10 million versus $76 million in the prior year quarter. Despite declining revenues, we improved year-over-year EBITDA in CapEx by $125 million. So when I say we drove a really aggressive cost transformation, the results really talk to it. We ended the year with $80 million in cash. In 2022, we entered into a debt agreement to bolster our liquidity and help us carry out the transformation. And all through 2022, we beat or met guidance that we set out throughout the year for all 4 quarters. Our headcount is 40% lower now than where it was at the beginning of 22. So finally, what I'll leave with, like I said, our track record. We've managed to go through different inflections of the industries. Everybody knows P90X, but if you look at P90X, it took 17 years to get to $1 billion in accumulated aggregate revenue. Everything we've launched afterwards got us to $1 billion faster. So we have an incredible track record of innovation, and we look forward to where we're going to take this from here with this new platform. So with that, I'll open it up for questions.
So my first question is, I'm trying to understand how the market is misinterpreting the opportunity coming forward, given the fact that on March 2nd, everyone who signs up now, instead of $120 a year, it's $180. And on 2 million subscribers, that means you're going to get another $120 million in revenue at an 80% profit margin. You're about $10 million a quarter burn rate at this point. And that's about 30 million a quarter is what that'll equate to in my math, which means come next year, you're probably going to free cash flow $10, $15 million a quarter. Stock price isn't going to stay here for very long because you'll probably be buying back the stock if you've got 10 or $15 million in free cash flow a quarter.
Yeah. No, a great statement. It's good I gave you the microphone. I can't disagree with you. And yeah, I mean, that's an incredible opportunity, right? I think I go back to people know us in the investor domain since going public. But when you look at the 24-year legacy, 21 out of 24 years profitable, managed through, I mean, that BOD transition was when we moved from DVD to streaming and built $1 billion worth of revenue in 6 years. Like I said, we accelerated every time. So we only plan on accelerating it from here. I just think this, the crazy market we're in is valuating that way. It's a misunderstood story. Yeah, look, I mean, if we get there at this value, it's the best thing to do with cash, right? So, we're feeling good about where we are in the transformation, and we're executing to plan. I mean, having launched in March, like I said, in a year of contraction while taking out cost involved really rethinking the business. And look, this wasn't cutting to the bone to a point where revenue keeps declining. This was really rethinking it to make it the most attractive thing, to really get it into growth mode. And we reset the business to get it back to a 10% EBITDA. Yeah, absolutely. We did factor in higher churn. So that's, I'll wait till May 8th because that's when we'll share our Q1 guidance, because we launched it in March. But definitely that was factored in. But what I'll say is, you may hear it as a price increase, but there's a bit more to it than that, right? We had a premium platform that was $298, and we had a basic platform that was in $119. What we did is we took the premium platform down to $179. And once we launched the revamp one, we told users you can no longer renew on the old one, you can only renew on the new one. And we're giving them trials ahead of time so they could check it out. Hello, go ahead. Yeah. So what drove the 40% headcount for those that are on the webcast? There was a lot of complexity in the business. We had OpenFit, which was a different platform. And then we had the basic BOD, and then we had BODi, which was our premium platform. Collapsing everything into one means one technology stack, one marketing budget, one content production budget. So it's delivered incredible economies of scale. So that's why I said the 40% reduction is not a get everybody out and stop producing everything. We actually managed to reinvent the business simultaneously through dramatic simplification. Just so I go, you had your hand. Did you still want to ask something? Oh, there you go. Okay. Yeah. Yeah. Well, and think about it in terms of retention, right? If the user comes in, we're getting the users in, right? What we're trying to do is reinvent the model where you don't just come in, do a program, and leave. You come in, you do a program, and you're motivated to continue. So the content is there for you, and we're purposely highly curating it. So when I said there's a master class per month and different speakers every time, it's all about not crowding it so people are not overwhelmed with what it is. So we're less positioning it in terms of let's go grab people and say, come in because of mindfulness. It's rather once you're in, how do you get the motivation to continue and enjoy your journey? And that leads to better renewal. Because somebody asked about churn after. Enemy in this business, cut the churn down. You cut the churn down, you get a much higher return on your customer acquisition cost.
So I've had preliminary discussions with folks that run private equity firms, run other firms, banks, and had a conversation about potentially taking the company private. Do you think that Carl would be open to buying out the public float at a $6 or $7 share price?
Yeah, look, you got to keep all alternatives on the table. Nobody's close to anything. So it's it's a good idea. Good discussions you're having. All right. Well, I know our watcher here is telling us we're up for time. Once again, thank you, everybody.